The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 29th day, 30th day. What happened? Why does it say 30 over there? I kept typing in 29. Oh, yesterday was 29. So let me just check my opening call. I typed in 29. It should have been 30. 30th day of May. How did that happen? Lost a day. The Dow is up 280 at 24,638. S&P is up 33 at 2723. This time yesterday, we were down that amount. Very interestingly, the QQQ, so let's see, the Dow is up 1.1%, the S&P is up 1.2%, the Index 100 QQQ series is up 1.38% at 170.36. The IWM is at an all-time high, up 1.67%, up 269 to 164.21. So this has been the big question for me. Let me just quickly go to the E-mini, because I know a lot of you are looking at the E-minis. Leg C in the 120-minute chart. And this is really important because it's gone slightly above the kind of opening we had yesterday. MACD is good, stochastic is very good at 85%. The weekly chart, the MACD is not yet cross positive. So that arch formation is still active, and I wouldn't be surprised to get another couple of days upside, and then we switch again. Excuse me. And that would make that 2741.75 high at peak D in the daily chart. That was 6, 7 sessions ago. That's going to be very important. Now, I put it down, arrow in. I was hesitant to do that. And one of the reasons is when the MACD's had a really good run and it just dips down slightly on a very quick down move, it could make a little M pattern. Look, it did that right there back in early May. So, and that's where we actually went long the Dow. And now we're not long the Dow. I wanted to go long this morning to get back in, but my reading of the weekly chart says we could have a bit of a bounce here, a give back of yesterday's emotional decline. But there's a good chance that we're going to fail within a few days, and then we start testing the downside. It didn't stop us and my subscribers and I from adding to the long side this morning, and having no shorts. And I keep looking at this and say, what is going on? We don't have any shorts. We haven't had shorts for a while. But this market is lending itself to using this residual strength in a rotational way. For instance, let me just give you an example. Look, you've got LRCX, which was one of the great Lam Research, one of the great semiconductor stocks of 2016, 17, and going into 18. And then it makes a high 3 months ago, and an F/C alternate count in the monthly chart, a D/A in the weekly, and I think everything about it says it's more like a D. But from the 233 area, it slumps to the 159, and it rallies back. It goes from one. Let me do this again. From the 220 area, it drops to 159. From 159, raised to 232. 232 comes back to 181, and now it's at 203. And that's suggesting to me that Lam Research now is not one of the leaders. MU, Micron, is doing really well. It is at all-time highs as we speak, having broken out in the weekly chart, having broken out to a leg E in the monthly chart, a leg D in the daily. Outstanding action. So you've got a real mix. Now, Micron had been a tremendous winner as well. but it has kept up that winning pace. Let me just check on advanced micro. I haven't updated that for a little while. Yeah, there it is, a recycle. This is A, B, this is brand new leg C to the upside. Should go a little higher. I'm actually going to call it the G/C, and I'll explain. I don't want to take time now to do that. There's a reason for that. It has to do with the MACD. So I'm calling it G/C. But you've got some leadership. Intel up at all-time high as we speak. A, B, this is a leg C. I'm calling it could be an E, but I'm calling it a C in the daily chart. And it's rotated through a G/C in the weekly chart and a leg E in the monthly. So far, all-time highs. Whoops, I shouldn't have said all-time highs, because Intel's a stock that goes back a long, long time. 75.83, once upon a time, double top. It makes the Chapman Wave 2-bar reversal, 75.83, August of 2000, and 75.69, 14 cents lower, 24 cents lower, not 14 cents lower the following month. And look at that candle. I don't think you've ever seen a candle like that in any, not many stocks go from 75.69 to 41 in 1 month when there wasn't real bad news. It was just part of the market conditions at that particular time. Okay, so this is what I'm trying to say, that there's a rotation going on. That rotation is saying that there are just enough good stocks to really keep this market buoyant. I keep thinking the scales of justice. On the one hand, you've got maybe just a handful of stocks, but they are the leaders. They're the heavily weighted ones. And on the other hand, you've got a whole slew, but they don't make up for the strength of the good ones. And the good ones are leading in some sectors. Here's another, for instance, IBB, the NASDAQ biotech sector. Having a really strong leg D today, up at $1.55 at 108.63, still way below the last high. It was made at 116 back in March. All-time high of 133.60 was a peak D in the Chapman Wave. So it's this rotation that said to me, don't get too carried away thinking short just yet. There will be an opportunity, and even then, within the parameters that we look at, and I'm going to be giving a webinar on the 15th, Thursday, the 15th of, it's not up, it'll be up tomorrow on the website, on the 15th of June, Thursday at 6 o'clock. And I'll be talking about this very thing. Why? Because within the context of patterns, this arch that goes to a lowercase h that goes to a lowercase m formation can be pretty heavy in saying we can be here for quite a while, trapped within the borders. In this case, it's called a 25,200, 25,300, and 23,500, 23,300. That area can stay here for quite a while. Okay, so within this area, some things work, and you just take the opportunity. I just don't yet want to be getting too carried away with the short side. Now, let's go on. So we went to the IWM, look, all-time high, very important. Now, I wanted to do something to show you. Okay, I'll do it. I was asked about the SMHs up $1.14 at 108.57, having started a leg E, 109.13 a target and real strong resistance. So we'll see what happens over the coming days. Coming back, Basil Chapman, Tiger Fitness, Dow up 273, S&P's up 32. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I was asked while I was doing the chart of the SMHs, what was the question? Oh, stocks, Head and Shoulders. Yeah, I've been talking about this for a little while, and it's one of the reasons why we have our position. We've taken some profits in it. We're in at 100 on the SOXL. That's the 3 times long. We're in at just under 140, and it's trading now at 171.63. So that's a 31 point gain. But this is what I was nervous about. The weekly chart has the potential for a double top Head and Shoulders pattern. So here on the left side at 108.56, well, that's really the major left side shoulder. Here's the head at 114.55 back on the week of the 16th of March. And then it pulls back. It doesn't take out the left side low of 93.88. Instead, it goes to 95.47 and bounces very strongly. And this is a gray leg A, but we'll see. Is it going to stall here and make another? Is this a left side shoulder, the head, and then the right side shoulder? I don't know. It could even pull back and make a double left side shoulder and a double right side shoulder. A whole bunch of things could happen. What I am impressed at is look at the monthly chart, how we get into the thin wick, the inverse. It's not quite a Chapman Wave Roman candle, inverse candle. But if the SMHs start to trade for 2 out of 3 days in the next 2 weeks, above 109, let's go to 110, there's a real good chance you're going to test the all-time high. And I'm thinking that the semiconductors have had such a spectacular move that they are ready for a pullback. Well, they've had 2 pullbacks. Maybe it adds up to 1. The last one was 16.5% in the SMH. All right, enough with that. Let's go on to something else. They had a question about jazz. So jazz is trading right now at 168.07 up, 252. Monthly chart leg B. Very nice action, strong candle for May. Of course, we've got 2 days to go. 1 day to go. The leg E in the weekly chart has good technicals, and you had a Chapman Wave squash in the daily chart, but it didn't go beyond peak A. Peak A stopped on the 14th, it went from the 146 or 145 area straight up to 168.48 on the 14th. And then it goes to 168.64, 22 cents less, 24 cents less on the 21st, pulls back, holds the 9-period moving average again. And today it's testing 168.74. 174. It has broken it. It is now in leg B. I love the way that works. So leg B for jazz. Lovely looking chart. In fact, let me make a note of it right here. Jazz. Summertime. All right. So we've got, that's looking good. And the support will be between 163 and 161. If it closes under 160 in the next 2 weeks, that could be a problem. I think it's looking very good. Next question was, Dow, how long to make new highs before bulls throw in the towel? Yeah, that's a really good question. It could even be today. I don't know, maybe I should have jumped right back in. But you can see there's overhead resistance at 224.653, the 9-period moving average. Oh, that's where we are right now, 26.52. So let me just double check. I think I said the wrong thing. It is black line right there. 24.686. So it's another 32 points higher. It could do that even today. And the other thing is it's filling in the gap, and the gap has a low of 24.687. So that whole thing says, wow, that's what it says. Then you got your arch formation. So I would say that if there was a move above 25,120, I wouldn't be surprised if a lot of bears just give up and say, no, I'm done. This is going higher. All right. Sings, yes. So, yep, that's a special CD. That's ours, called Basil Sings Pori and Bess. No, not Porgy, Pori. Purley and Bess. That's what it is. Basil Sings Purley and Bess. So now let's go on. GC, gold. Gold is up $3.30 at 13.07. Nice candle, not nice enough yet. It'll be a fabulous candle if it can get to, first it has to just close on a daily basis above 1312.5. That'll start leg B. Not good enough for me. I want to see a bigger move. However, it will happen if the dollar, here we go, which is down 78 cents. And I've been talking about this all day. I did a show with Tommy earlier on at 10 o'clock, the bull bear binary show. And Tom wasn't there. I was sitting in for with Tommy Jr. And we discussed this. And I'm looking at the dollar. This really looks, everything about it says, it looks like the peak F is just being made at 95.03. We've been long since 90. We're actually 90.07 via the UUP. And it should take a break. And I wanted to have, for subscribers, I wanted to ameliorate any pullback because I think it's only going to be a pullback, so it'll be a major decline. I'm thinking there's a real good chance that over a period of 2 weeks, maybe even 3 weeks, there's a pullback and the dollar goes to the 92.50, maybe even 92.20 area. Maybe it even breaks 92, I don't know. But in the meantime, back at the ranch, this is great action. Weekly chart's beautiful, and I think that there should be a peak C probably next week. And to ameliorate that pullback, we bought the GDX. So we're thinking that the gold stocks, that's what the GDX, the gold miners, will do okay. To me, I'm just saying okay. I don't know yet. I have to see it really decent. Even today, the candle's lousy, up 0.22 at 22.37. GDX has to get to 22.78, 22.83. And then I'm saying, aha, finally, it's going to help the weekly chart deflect higher and the stochastic go from 61% probably to about 66%, which is really what you need, 65%. That's what you need to see. And I just think, remember the arch formation goes to an M formation. I think that's all we're looking at in the monthly chart of the GDX. Yep, could have a nice bounce, but just treat it as yet another, I'll draw it in, yet another arch formation. Limited upside, might be time more than price, but we'll see. in position. Now let the charts tell us. Okay. Silver. Silver is up. If I can get it. Look, silver is up 0.17. Nice green candle. It does that. And then it has a red candle. It goes green, red, green, red, green, red. But in the meantime, back at the ranch, if silver at 16.55 can actually have one trade in the 1678, 1682 area, that'll really help the technicals a lot. And then it could try to push to the 1688, 1710. That's going to be really important. So step by step, that's all we can do here. I'll get back to crude oil, made a peak D in the Chapman wave, in the 120-minute chart, in the daily, probably in the weekly, and a leg D in the monthly. A hat trick, a quad trick, quad, hat, quad, 3, 4 times peak Ds. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello, so we're back, and now we're looking at the Dow up almost 300 points. Whoa, what a day, huh? A lot of short covering out there. So, crude oil makes a peak D in the daily. It goes from the 73s down to the 65s. It's trading now 68.36, 69.57 is the 9-period exponential moving average resistance. I think it's going to maybe bump into the, getting close to it, and then pull back, make an H pattern. That's my thinking. Weekly chart, leg D, almost certainly a peak D if it stalls in the 69s. If it goes to 71 by tomorrow, maybe there's a squeeze on Friday for a new high. I don't think so. I think it's a peak D in the weekly. Still only a leg D in the monthly, and technicals are still very good, actually. It says there's a lot of support in the 65s to 64s for crude oil. So I want you to look at the TLT. TLT had a whopper of a day yesterday. So when I was at the Boston Investors Group meeting last night as guest speaker, a couple of people brought up some very good points. I'll talk about them right now. One of them was that there was a heavy short position in bonds and U.S. bonds in particular, government bonds. And you can look at the squeeze going from the 116s to 122 in just whoops in a couple of days, and that is big. So it hit the 200-period moving average exactly yesterday. The TLT 122.44 is the moving average. It went to 122.52. Now it's pulling back. That resistance line could be quite strong. My thinking is if you go to my T-bond chart, yield chart, the 30-year has made a peak D and it's going to be resting for a little while. Now we've done most of the pullback. It could do a little bit more. I don't think it has to pull back all that much at 3.02, having gone from 3. Oh, I didn't type that in. From 3247. Let me just type that in. I don't want to forget about that. 32.47. That's 3.247%. And that is going to be quite significant. Let me make it in red so we know exactly what's going on. The 10-year, the brown TNX, has made it probably a peak F. I haven't labeled it completely yet. I think it's an F, pull back sharply, and it's a G in the 5-year cyan-colored FVX. So bond yields, I think for a little while, just, maybe a couple of weeks could hold steady without making new highs. Slight pullback. We'll see what happens, but that's what I wanted to show you. And the one thing I'm missing is that I wanted to talk about, can I get your, yeah, the transportation index. So you remember with crude oil pulling back, the airline index spiked higher. Now all of a sudden what you've got is a brand new move to the upside. I actually don't know what to count this in terms of my Chapman wave. Look, A, B, C, D. And then it could be a recycle, but you made a lower low. So this is an F. I'm calling it a G/A. G could be very negative. A is fantastically bullish. I hate that. That's like saying, oh, you know what? It could go up. Oh, but wait a minute. It could also go down. Big deal. All I'm saying is that the technicals have improved a lot. The weekly technicals are strengthening, and there's a real good sign that the high that was made in the IYR, the iShares Dow Jones US REITs. My thinking, yeah, I'm going to the transports, and it was the REITs. Ha! That says that the high that was made the week of the 11th of May at 78.26, and today, this week's high is 28, has gone to a leg D in the weekly chart. That's all I need to know. D in the weekly chart with good technicals, but a very quick peak A to peak B to peak C, and now leg D. So you got to watch this real closely. And what I mentioned yesterday was that the iShares Dow Jones US REITs index, this is the commercial property, is holding very well. And it might be telling us about the rotation. Remember, keep your eye on the middle chart. That's the weekly. The rotation into different sectors in the weekly chart is a bounce so far. Look, this is the IBB, also gone to a leg D, the sum in the daily chart. Nice action, but really not when you put into the context. This is just a quick beat to C, A to B to C in the weekly charts. So what happens if the market pulls back? Where's the rotation going to take the fund managers? I'm suggesting to you that we need to keep looking at the IBB and the IYR as potential. And I'll be giving a webinar in Thursday, the 15th of June at 6 o'clock. And I'll be talking about the rotation to different sectors and what can happen in the second half of the year. At least the third quarter of the first quarter of the second half of the year, the third quarter of the year. So let's go back to our story. I had a question about CRM. I discussed this with Tommy earlier on. Salesforce Tower opens officially on this past Tuesday, a week ago yesterday. It officially opened, that's when the ceremony was, but it really opened in January. However, I like to look at these things and say, hey, if this is going to all-time highs and now they are putting their money into a massive building, $1 billion building, is there any spin-off? Is there any negativity? And all I'm saying is, I watched that 131 double top starting on the 10th of May, round number high, retested 2 days later exactly at 131, pulled back to 128.09, and now with earnings yesterday being one, I mean, this is a fantastic company. It's a bellwether. It's an ice cutter. They're the ones that really took cloud computing to levels that nobody thought could happen. And Benioff is a fantastic talker, but he's also a doer. But is this just now saying, hey, it's a little toppy, maybe it's time for a rest? Well, watch this candle. Why? Because it spiked to a new high today to 132.40, was it? 132.55 was the, no, 132.30 was the open, 132.55 was the high. I was wanting to see if it was the same price. I'm going to be watching this candle because if it produces that Chapman Wave Roman candle, we've got to be a little careful because this could pull back and that'll maybe be a buying opportunity, especially if it had to pull back sharply with the market maybe over the next few weeks. We'll see. But in the meantime, all-time high, fantastic stock. Leg E in the F, I'm calling this F for now, in the daily, E in the weekly, and D in the monthly, and all the technicals are really concurring, and all the weekly and the monthly technicals are concurring with the rally, with the daily saying, you know what, I'm not really, you might go to a new high, but technically I'm not there technically. On balance volume is okay, it's not great. Relative strength is so-so, it's at about 58%. The stochastics at 54%. MACD hasn't yet turned positive. I'm going to be watching this. This is one of those, and I was saying that this is part of my little slew of stocks that I look at. For instance, CTAS, Cintas, overalls, uniforms, makes an all-time high about a month ago. Hasn't taken that out. The high, I should have typed that in, right? 184.22 was the high. And it's trading at 182.09. It's just slightly lower. Hasn't got the same chart pattern. Is this going to spike to the upside? I don't know. I'm watching it because Cintas at 182 is very positive at 185. But if over the next week and a half it starts to trade at 178, just 4 or 5 points lower, hey, that thing could have a monthly, a weekly pullback. Monthly is still looking good. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, I was just reminded, I did say I was talking about the transports and then I went to the IYR. I did correct that it was the IYR. Just quickly, ANAP was ANAP Pharmaceuticals trading at 63.26 up $1.17. I was asked about that. Made a peak in the daily, but it's holding at 63.26. I would say the 61 area to 60 is very strong support. And if it breaks and close, it doesn't have to even close. If it just goes over 65, that would start to improve leg C in the weekly chart, gray leg C actually, but improve the MACD, which is just turning positive now. Stochastic at 70, it'll help it to get to probably about 72 or 3%. So that's what it needs. Those are the parameters. Right now, it's just sort of stuck in a trading range. So here's the IYT. Did I even get to the IYT? No, there it is. Peak E made 3 days ago, confirmed yesterday. Leg E went to peak E. MACD is turning down, but still very strong. Stochastic's turning down and starting to weaken some. At 81%, on-balance volume is not that great. Relative strength is okay at about 60%. The MACD and stochastic in the daily and the weekly chart have just turned positive. And the iShares Dow Jones Transportation Average Index Fund trading at 196.39 has a monthly chart that says, hey, I just keep holding that 9-period moving average. Every time I touch it, it's like a springboard to go higher. So I'm going to say that the transports are going to be a big clue for me. If the transports over the next 2 weeks, no, I didn't mean 2 weeks. I meant week into next week, the second week, the first week of June, that is. If they're able to get to the 198.70, 199, actually anywhere in the 198s, that says that there's a real good chance that it's going to try for the 200 round number level. But it's a little bit stuck right now, just a very short term, and it's stuck at 196 with a very strong 194.5 to 193.5 support level. And as I say, break into the 198s would be very positive. So that's good with the IYT. Next question I had is CSX. I haven't looked at that for maybe about more than a week. Yeah. So look what happened. It made a peak D in the daily. Big pullback. It has that pattern that I've been showing you for weeks. We've seen stocks do this. There's that channel that I like to call the channel that can go one-to-one to the upside. And what it says is, if there's a break to the upside of this down channel, with the steadiness of this down channel, if there's a break and decent close above, it can go one-to-one, but I've seen it go 2-to-1 and 3-to-1 to the upside, and that's exactly what it did. So CSX looks great, all-time high as we speak. I asked the group last night, how many people, I'll ask all of you in the audience, and you can email me, how many of you have, during, say, the long weekend, So over Memorial Day weekend, how many of you had someone approach you or just in conversation start talking about either a stock that they've got that's done fantastic or the stock market in general? Did anybody out there go to a party or get together with people over the weekend and have somebody talk about the stock market? All I can say is that no one out of the crowd last night, one person did, but this is because it's the person that he always talks to whenever he gets together, so that doesn't really count. No one had anybody sort of come up and say, man, the market just, I have to tell you, this is so unusual. Here we are just off all-time highs, in some cases going to all-time highs, and no one is talking. It's like it's either, oh, well, that's the way it is. You know, Trump got in, the market was going up. That's the way it's supposed to be. And that's his one big benefit to society, is the stock market is doing, I don't know, whatever it is. Hey, that is unusual. I don't remember times like this. I know there were times when markets were going down and people had the glum face and they said, what should we do? But they're always talking about it. This is the first time that the market's been pretty darn good for a while, even though we've been in this consolidation for 2-3 months. Basically, it's held well. And if you're in the IWM, you wouldn't even think that there was anything going on other than good news. Same with the QQQ, same with the semiconductor index, doing very nicely. So what's going on? How come we don't have anybody talking about the stock market? None for me. I did hear people panicking on cryptos over the weekend. Yeah, that's something completely different. Remember, I spoke about the January 1st weekend where I was at a neighbor, and he said, you know, I missed that whole tech thing. I just didn't understand it. But with the crypto, he says, I am in. I just got in. I am in. And this was January the 1st, and of course, hasn't been good news, going from 19,000 to 6,000, now trading in the 7,000s. That's Bitcoin at least. So, yeah, this is a very interesting time. So that to me is a very big aspect in this coda phenomenon that I keep talking about, this going into the third phase of the coda move. And I don't know how it's going to result this year, other than I'm expecting at least 1 or 2, maybe even 3 sudden big sell-offs on bad news. How the lows are held is going to be 2 separate things. I'm talking about the one part, the emotional part, and the other is that I am anticipating that at some particular time this year, we should be making new highs in the Dow and the S&P. That's the way I'm looking at it. Could be completely wrong, but that's just the way I'm looking at it. So CSX, Corporation Rails, trading up $1.35 at 65.57. Interleg E right now, well, this could even turn out to be an Chapman Wave instant restart again. Usually you wouldn't get it the third time, but let's just see what happens. Weekly charts still there. All the technicals are good. CSX looks really good. Okay, I hope I answered that question. WLL. All right, so we're going to oils. So this is oil service. WL is that? What's the Whiting or something? Yeah, Whiting Petroleum. Whoa, look at that. I haven't notated it here. A move like this, when it creeps up like that, walking, it's like a worm up a branch of a tree. Just a little wiggle, 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 all the way up. Never breaks the branch low. In this case, the black line, the 9-period moving average. Then suddenly it goes to a high, pulls back sharply, and then pops back up again. So it reminds me of the chart that I sent to subscribers, XPO. Gosh, do I remember it now? We did a whole study on this. I just do so many charts. No, it wasn't XPO. Oh, my goodness. What was the chart that I did the study on? Because it's just been so phenomenal. And then it was in this channel straight up, and then it broke the channel the other day, and then make the U-turn to try to retest the top. All right, I have to think about it. I have to go through all my notes and my different calls. All right, well, I can't remember it right now. So XPO was another question. Yeah, this is acting very well. This is XPO Logistics Inc. It's in the rails. I think they do the computing. They do some kind of technical work, kind of background. And all-time highs just a week ago. And it's holding very well. It's at 108.96. I think there's a chance that it could try one little pop into the 111s, and then it might pull back a little deeper. But all I can say is that if it starts to trade under 104, that's about 5 points down from here, at any point in the next 3 weeks, there's a good chance it's going to have a bit of a pullback in time. Price, it has the 102 to 100 to a 99 level key support, but XPO is acting very well. Just a little bit tired, it's resting. So, hey, I'll be right back. In fact, I'm going to try to check up now on what my study piece was. That's interesting. I'll be back. Now's at 78.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
All right, so just to wrap up, I'm going to be doing Tom's show at 3 o'clock this afternoon, the hour before the close, so that'll be a lot of fun. When I look at my Dow Quartet, so the Dow Quartet in the Chapman Wave Index is GE, made a peak E in the 1550 area, having come off the 1273 low, and now it's pulling back. I think this is it for now. We're going to have to watch GE closely. Will it break the low? I think it's trying to test, it's trying to form some kind of an H2 lowercase m pattern. IBM is trading right now. It's up $1.14. Lousy weekly chart, lousy monthly chart, and it's making the H pattern I just spoke about at a peak A, B, C. It's like a peak C minus, and it's testing the 140 low. It's at 142 right now, 35. Yep, it's just the same sort of thing. Triple M had lousy action, and today it's trying to make up. It's up 2.84. There's that H pattern. A lot of these patterns at the lows, and it says, you know what? The cyclicals have been impacted by what the news could be to impact the cyclicals this way. And then UTX is the fourth one. We are long. We're not long from under 120 and is trading right now at 126. Hit 128.33 the other day. This is going to be very important. Will UTX be the one that holds best out of those four and then starts to break into the 130s come middle of summer? I'm thinking there's a good chance to do that. Depends how it handles any big pullback in the market. But 115.40 low, so far, I think it's going to hold any big pullback. We'll see. It's got that down channel in the weekly to break out of. So a couple of things I want to talk about. Within the context of the markets, what I've been suggesting is if you see something you like, don't be afraid because of the market conditions. Just don't buy as much. If you want to sleep at night and you're going to buy X amount, buy a little bit less, and then you can sleep at night, and then you can put in a slightly wider stop. Still have stops. So that's the way I've been looking at it. We bought a stock today, one that we had before with nice profits. We got back in it again this morning at $3.61, and it hit $3.69 a little while ago. Hey, that's intraday. Who knows how it will close? It could close week. But the fact is that I liked it. I thought we wanted to get back in. Now we can put a stop at a reasonable level. That's what you want to do. Just don't be afraid. Do the bidding that's asking, and then follow the plan. So I'll be back in a little while. Tom Show 3. Have a great day. Thank you for...
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.